Hey, good afternoon, risk managers. Dan Sugar with trendlinebreak.com, going over the E-mini S&P charts today. The Bears came out of hibernation finally and had a nice drop starting last night. Bonds have been going down, which means interest rates have been going up. Plus, some of the Fed comments in the Fed minutes has spooked the market a little bit. It was a little frothy and very strong the last couple of weeks, so we're due for a 2, 3, or 5% pullback. Markets don't go in straight lines, and there was a nice trend line break. I trade 5 accounts, so I used some trendline breaks last night and this morning to the downside on the daily 480, 240, and 60. And I caught a couple nice shorts last night and this morning and stopped around 11 o'clock. I was done. They did have a nice rally later on, though, from 20 to around 45 or 50. So 25 point, 30 point rally off the lows, and they actually got above a downtrend line. So let's take a look at those charts right here. Here's the daily S&P. I put this on Twitter, by the way, last night at TLB Trader. If you're on Twitter, I tweeted this last night when the market was just breaking the trend line at 44.75, 44.77, and we went down to 1950 today. So about a 50-point drop from last night's signal. And again, we were very frothy. The volume was much stronger on this rally than it was on the latest rally. So we made a new high by a little bit. And the volume, like I said, was much better on this first rally than the rally that ended last week and earlier this week. Great double top, too, by the way. I mentioned on the Twitter potential double top. I love double tops and trend line breaks after it's very frothy. So we'll see if this is a 1 or 2 day event, or is this just that was a huge rally in a bear market rally, and we're going to go down another 5 or 10%. We shall see. But AI and tech stocks have been leading the way for a while, as you're probably aware, but there's a nice trend line break on the daily. The risk was about 5 to 8 points, depending on your time frame, and the reward was 30 to 50 points on the daily chart. Here's the 480, and a real quick look at bonds, folks. Bonds have been dropping real fast and furious, and there's the 480 chart on the 30-year bond, 127 down to 123 and change, almost 4 basis points in about 2.5 days or 2 days. So some trendline breaks on that one as well. On the T-bonds, if you trade stocks or stock index futures or index ETFs, you have to watch the bond market, as we've been saying for a while. So, and then the last chart we'll look at is the 480 on the S&P as well and NASDAQ. Here's the S&P, little wedge. They broke them down like Monday or Tuesday before the holiday, ran them back up. And then the second wave was the bigger wave, on the trend line break here. So you grab these lows, connect them. You want to short below the trend line, 3, 4, 5 points, depending on your time frame. And your risk is the stop on the other side of the trend line. Pretty simple stuff, folks. If you want some more information, I have a great masterclass, summer special going on as well. The masterclass, 5-hour masterclass, 90 minutes of consulting, and my ebook as part of a full package on trend following and trend line. So reach out at Dan at trendlinebreak.com or on Twitter, and we'll see you then. Thanks, everyone.